This is the Building Wealth Podcast with your host, Stephen P. Sitkowski.
Well, welcome everybody. Stephen Sitkowski. This is my Building Wealth podcast. They've all been a lot of fun to do. It's very gratifying to sort of sift through what's happening in the financial markets and then attempt to have it make sense to the average person. And the ultimate hope is that things are actionable. That you walk away from this going, oh, I should try that, or I should do this, or I should look into this stock or learn that strategy. Speaking of which, I give my email address each time I do this and tell people if you have a topic you want me to cover or a question you'd like for me to address here, shoot me a note. Happy to do it. So I had a request that I demonstrate spread trades. So I discussed them last week. I'm going to be honest with you. It wasn't a very good tutorial on my part. I was worried about time, whether we'd get it all in. So what I'm going to do this time is I am actually going to, from scratch, shop for potential spread trade opportunities, pull some up on a chart, look at them, and see if I can't find a couple of real trades. Now, those should not be considered as an investment advice, but the kind of trades that I would put my own money in. So we'll do that toward the end. But again, if there are other topics you'd like for me to cover, don't be shy. That's why I do this. So go ahead and share my screen with you. It is the 17th of August. So are we halfway through summer? More than half? What is summer? June, July, August? Yeah, we're getting to the tail end of summer. That would explain why it's getting a little cooler out. We'll be skiing in no time. So there's my email right there, stevesitkowski@gmail.com. So if there's anything you'd like to submit to me, I'd love to hear from you. Or just, ways that we can improve what we're doing here. A little bit of my background. Most of you, I'm assuming, know me. I've been working with people and their money now for 45 years. I've trained somewhere between 1.5 and 2 million people. I sort of lost count during the process. It's been a lot of folks. And there are a few things in life that I enjoy more than teaching. And I've basically taught my whole life, starting back when I was a Sunday school teacher when I was in high school. And then I was part of the joint educational program when I was going to USC. So this is just who I am, and thank you for being whoever you are. So as a reminder, everything that we do here is for educational purposes only. Don't look at it as investment advice. So even if I find a trade and tell you I really like it, it means I really like the trade. It doesn't necessarily mean I really like the trade for you. I don't know anything about you. I don't know what you know about trading options. I don't know about your risk tolerance, size of your account. But I'm going to show you this so you can learn. And if you don't know, then you can reach out to me. By the way, we do introductory options training webinars a couple of times a week. If you want an invitation to one of those, again, shoot me an email. Be happy to include you on the list. So what's moving the markets? The markets are kind of today. So I'm recording this on Monday. S&P, I'm at 1:30 Mountain Time, so the market's going to close in 30 minutes. S&P is down 0.46, NASDAQ is down 0.28, NASDAQ 100, so that's big tech, down 1.5. Those are no big moves. Russell 2000 down 0.4. 4.3, and we'll sort of pull that up on a chart a little bit later. So why is the market kind of in a somewhat of a funk? Well, it's AI versus Iran for the markets. That's where we're at. You have all the euphoria that comes with the possibilities of artificial intelligence versus this mess that we've got in Iran. Now, I'm not pointing fingers and I don't have any of the inside scoop, but it certainly looks to me like that deal's been mismanaged. I don't think we're going to end up getting a thing for it from where we began. I just don't think, whenever there's a conclusion to this, that we're going to go, oh, yeah, but look at how it's benefited. So it was worth spending those billions of dollars and the toll on human life. That's just me. And I could be completely in the dark about that. So I will acknowledge that up front. But that's kind of what the market is processing. These incredible opportunities with higher oil prices because of the war that creates higher rates of interest because of higher oil prices and the uncertainty that comes with it and the roller coaster that we've all been on relative to the announcements, hey, we're going to have a resolution. No, we're not. We got this deal pretty much wrapped up. No, we don't. Markets don't like that. So it's been a pretty solid year, but it's come with a whole lot of volatility, mostly because of Iran. I think without that, I would say markets would be up because of the earnings, probably 20% year to date. Latest FOMC minutes, so those are the Fed minutes, are going to be coming out on Wednesday. So there won't be a formal interest rate announcement, but there'll be a lot of commentary on where the Fed thinks the economy is, where the Fed's priorities are likely to be moving forward. So that is definitely worth checking in on. So that'll be released and it'll hit like CNBC.com and Yahoo.com, Yahoo Finance, um, at 2 o'clock Eastern is when they make those announcements. I thought this was kind of interesting. Harvard has a $2.2 billion stake in SpaceX. I got to tell you, when I read that, a whole bunch of stuff went through my head. First of all, that's good for SpaceX when you get really smart people putting their money into your stock. My next thought was, how the hell does Harvard have 2.2 billion to invest in a company while they're charging children 60 and $70,000 a year in tuition? Reconcile that for me. How do you do those? And how much money must Harvard have, which they've collected as a result of these tuitions and people dying and needing to leave them more money in their mind? And hey, a person's got a right to leave their money to whoever they want. But they can put 2.2 billion into a single investment. It's not the only thing they own. What do they got? 10 billion? 20 billion? We've lost our way. That's all I'm going to say. 10-year Treasury, thanks to oil, is up to 4.697. So we are tickling 4.7%. So I told you, I'd really like to see, and the market would like to see, 10-year Treasury under 4.5. We're going the wrong direction. The only way that's going to happen is if we get some agreement in the Middle East. Now, mark my words, the 10-year Treasury goes above 5%, and I don't think it will. But if it does, this market will pull back 10%. Bam. Book that. Telling you that's what'll happen. And oil prices, surprise, surprise, are up today, $82.49. If I sound like I'm getting sick of this, I am. The fact that countries can't get along in 2026, I thought by now we'd be at a whole different place in our society. And it's just a little discouraging because I don't see an end to sight in this resolution. Do you? Last week's market breadth, not bad. So we have the New York Stock Exchange on the left, NASDAQ, which is tech heavy, on the right. So the two things that I look at, advancers versus decliners. So on the NYSE, it was about a push, but slight advantage to the advancers, 1,469 compared to 1,338. On the NASDAQ, we have 2,977 that were up, 2,205 that were down. So decidedly bullish. And when you look at new highs on the New York Stock Exchange, 250 hit their 52-week highs, 172 hit their 52-week lows. On the NASDAQ, 651 new highs compared to 354 new lows. So both of those are great. That is indicative, my friends, of a bullish market in spite of the challenges that this market faces. Last week's heat map. So I see a little more green than red. That would make sense. And, um, pockets of green. Well, there was kind of a comeback in semiconductors. Um, Tech generally did well with the exception of Broadcom. It was down 6.5%. On the communication side, that wasn't very good. Alphabet, formerly Google, down 4%. Meta, 3.5%. Amazon, down 6%. Over in financials, Berkshire Hathaway B shares down 5%. Cisco was down 8%. But overall, again, not bad. Nothing stellar, not bad. Last week's sector performance. Now, this is what you look at if you want to get sort of a feel for the attitude of the marketplace. I teach these 2-day classes, and, part of the vocab is risk on, risk off. Risk on is growth stocks, technology, biotech, crypto. When you get into risk off, it looks like this. What was up? Energy, utilities, consumer staples, healthcare, financials, industrials, and real estate. Tech was about a push. What was down the most? Consumer discretionary, down 2%. That is sort of a proxy for the economy, wouldn't you say? Consumer discretionary, stuff that people want but don't need, and they're spending money on it anyway. Well, they pulled back clearly. Nvidia is really carrying the load for the S&P 500. So Nvidia has single-handedly added 10% to the S&P's 84% return in the last 5 years. Is that incredible? If Nvidia was the only stock you owned, you'd probably never have to work another day the rest of your life if you had enough of it. Consumer sentiment wanes. So I think this could be directly attributed to the war in Iran. I think people are getting fed up with it, like I am. And you can see from July to August how consumer sentiment went down. Now, here's the thing. When consumers start feeling a little froggy, they stop spending money. That's how you slow the economy. It hasn't happened yet, but retail spending month over month was flat. That hasn't happened in a while. It's always a positive number. So maybe, $100 to fill somebody's gas tank and a 23% rate of interest on a credit card is starting to take its toll. Mortgages at 6.5%. In terms of valuation, I'm always cognizant of this metrics because you don't want to be buying stocks that have outrageous multiples. And I don't really see that now. Industrials, which has been a leading sector for the year, their current PE has gotten a little pricey at 25. So as a percentage rank over the last 10 years, it's at 80%. So yeah, that's pretty pricey. Consumer discretionary is at 24. And this is forward PE based on what we expect earnings to do next year. Technology at 22. Imagine that. Tech stocks have a lower PE than industrials. Not sure I've seen that before. And these tech stocks on their 10-year ranking, they're only at 55%. So it's about average. Consumer staples got way ahead of itself. It's up at 82%. Healthcare, they're having a hard time making money. The P is only 19. PE on the S&P is 20. Yet they're in the 86th percentile. On the other hand, communication services, which has sort of been drubbed lately, they're down at 18% with a PE of 18. So maybe there's some value there. And energy that, you would think that is overpriced because of the rise in oil. It's not. PE on that is still at 14, and it pays a nice dividend, a lot of those stocks. Investors are all in. So allocation to equity percentage, look at that. Man, we are basically at a high since the beginning of July. So people are putting money into equity. So I think the general consensus is people are a little nervous about the future, a bit unsure, but they still believe that I got to put money into stocks. And I'll tell you something else. There's a lot of passive investing going on. People that have 401ks every 2 weeks, money comes out of their check and it's used to buy stocks. So this is going to contribute to the percentage that we have here. So we're sitting at almost 60% of total portfolios being invested in stocks, right? Versus money market or bonds. There is a whole lot of pessimism right now, and I think this ties in with um, consumer sentiment. So some of you can see this, some of you have me in audio only mode. So I try to do my best to articulate what other people are seeing. But if we look at index of consumer sentiment from July to August, that dropped from 55.2 down to 51. That's a big step down. Current economic conditions have fallen from 54.8 to 51.8. Another pretty big drop. And index of consumer expectations have fallen from 55.4 to 50.6. Those are big moves to the downside. People are getting concerned. Small business owners, on the other hand, are feeling pretty good about stuff. The small business optimism level has been on the rise. Certainly better than it was last month by a pretty good margin. Now, here's some more good news. There was a survey done from the National Federation of Independent Business, And they were asking about small businesses hiring plans, and that is moving up pretty dramatically from the previous month from 5% up to 15%. So business feels good about the economy. I think the consumer is the one that's struggling with it. Morgan Stanley sees only a 50% chance of a rate hike this year. So that's come down a lot from over 75%, and that's because we've been getting lower inflation prints. CPI last month was actually down, and then the next month was flat. PPI, inflation at the wholesale level, came in less than what was anticipated. And I keep saying the wild card here is that you have a new Fed chair, Kevin Warsh, and I wish him all the best. A is getting pressured, I'm sure, from the president to lower rates. His predecessor did, absolutely. Um, and I think he is going to feel a great deal of angst raising rates because he had to go to Trump and say, listen, I believe rates should have been lower in order to get the appointment, right? Being brilliant is one thing, but being in alignment with what the president wants, that's how you get appointments. And we'll see how that plays out. So Morgan Stanley thinks 50% chance no rate hike. It was almost perfunctory a couple of months ago. New York manufacturing on the rise, the best it's been in 4 years. Might have something to do with data centers. Speaking of which, you see the manufacturing plant that Elon Musk is building? Is that thing impressive? Holy cow. Market sentiment dipped a little bit. So this is from a survey of independent investors. They asked them over the next 6 months, what's the market going to do? And 34.7 responded go higher, 37.9 move lower. So a little more bearishness than bullishness. Now, this gets done once a week. So that was updated August 12th on the Fear Greed Index, which gets updated every day throughout the day. It's in greed. It's at 62. So greed causes buying. And what have investors been doing? Buying. So those two things kind of go hand in hand. So that's always good for the market. Future of interest rates. So as it sits today, according to the CME FedWatch tool, which is what we're all looking at, we're expecting a 25 basis point rate hike in December. So we're not expecting one in September. In fact, there's a 70% chance we won't get a rate hike, which that's big news. I remember when there was a 70% chance we would get a rate hike. So that's thanks to those inflation prints. And now we're only looking at one rate hike. So one rate hike of 25 basis points isn't really going to move this market one way or another. You start talking 2 and 3 rate hikes, market's going to get real squirrely. Sector performance year to date. So the S&P 500 is up 13.61%. Pretty darn respectable. Big winner is energy. Throw that out because that's what? That's war, which hopefully is not sustainable. So next level, technology. Why has tech done so well this year? The earnings are through the roof. Most of that is AI related. Then we have industrials, AI data centers up 20%. So those are the two beats. The only one that is not positive is consumer discretionary, and it's basically break even on the year. So it's been a pretty darn good year. This week's earnings, there's not many of them. And candidly, I'm not sure any of this moves the markets. I mean, I'm going to be interested on Tuesday after the bell what Toll Brothers has to say. They're a high-end luxury home builder. So we'll get a feel for how the high-end consumer's doing. And then for mere mortals, I'll be interested in following TJX, Lowe's, and Target. We got Walmart coming out on Thursday. They're generally pretty insightful about the economy. So we don't have a big number, but some of those are definitely worth watching. News of the week. Let's see what's coming out this week that might be potentially market moving. So today we had the Empire State Manufacturing Survey, which was great. The housing market index, better than expected. So on Tuesday, anything going to move the market? Nope. Wednesday, we have the Federal Open Market Committee minutes that will be released. Potential market mover, probably not. Thursday, we get the Philly Business Outlook. Yeah. Weekly job claims, I check that every week. I'm starting to see a little weakness in the jobs market. I'll be following that for us pretty carefully. And then we get the flash manufacturing PMI and the services PMI, which is kind of a proxy for the economy. So, not a huge news week, but definitely some things in there that are worth keeping an eye on. All right, speaking of keeping an eye on, let's take a look at the charts. When in doubt, look at the charts. Looking for the SPX. Well, SpaceX is at 145. It's been making a bit of a comeback. Well, then let me just type it in. I'm sure it's up here and I'm just missing it. All right, I had enough of it. SPX. So this is the S&P 500. See what wonders it has to reveal. So the yellow line that you see here is the 50-day moving average. You'll notice it is sloping upward. That's bullish. And we are above the 50-day, also bullish. So we temporarily made a new high and we're sort of still stuck in this trading range. So we'll see if we can break out of that. But, generally all good. Let's take a look at an intraday. Market started off just fine and basically proceeded to drop the entire day, right? And again, I think just the weight of the conflict in the Middle East is what did it. How about the VIX? Let's see if the volatility index went up. Are people getting a little nervous? In fact, it did go up 7%. And it is now above 15, but it's still, as you can see, it's down here at a relatively low level. So we still have a pretty good sense of calm about the market. So, all right, let's do a little bit with spread trades. So what I'm going to do is I'm going to see um, if I can identify what I think would be a good spread trade candidate. So I talked to you about this last week. What is a spread trade? So it's where we simultaneously buy an option and sell an option on the same underlying stock at the same time. The idea is that we're going to place two in the money options. And our hope is at expiration, both of those options are still in the money. And given the fact that we are in a bullish market, the only kind of spread trades I'm interested in are with calls. You can do them with puts, but I'm not interested in doing them with puts again, we're in a bullish market. So let me find something, some potential candidates. So to do this, I'm going to go to FinViz and let's see what's kind of been moving the last week. So let me make a list. Nvidia and AMD, Intel, Micron. Okay, let's look in some other areas. I don't want to do energy too unpredictable. How about GE Vernova? Let's look at Goldman Sachs. These are just stocks that are up over the week. Um, Caterpillar. So what I'm going to do is until I find something, I'm going to just plug some of these stock symbols into a chart. And what I'm looking for, when you build a call spread, it's going to be built around a strong level of support. That's where we start. So, number one, I need a strong level of support. Number two, that strong level of support can't be too far away from the current price of the stock. Otherwise, you won't make any money on the spread trade, right? If you have a stock at 100 and you're making a bet that the stock won't go below 80, in 2 weeks, market's not going to reward you for that because you're basically taking almost no risk. So that's what I'm looking for. Strong level of support. That's the level where a stock is likely to bounce and move higher. And it's not too far away from the current price of the stock. So let's see if that's true on any of these. And I have not set this up in advance. Okay. So I'm coming to you live as if I know nothing about anything. Some of you are like, yeah, it sounds about right. Oh, okay. So here's NVIDIA. It's at 225. Now, during the day or during the week, I evaluate and go looking for trades. So on NVIDIA, I've already been shopping. So I see this level of support right in here at um, around 210. So NVIDIA's at 225. Looking at this chart, you could see, well, here are all the touch points for this support level. That is an old level of resistance. When you break through resistance, that becomes a new level of support. There's another touch point. There's another touch point. There's another touch point. So, based on all that, does it make sense to you that NVIDIA over the next 2 to 3 weeks is likely to be above $210 a share? I'd make that bet. So, let's see what we can get paid. And we're not too far away from the stock. So, I'm going to go into options. And generally, I will do these trades anywhere from 2 to 3 weeks out. Why don't we go out? Let's go out 18 days, shall we? So that's September 4th, between 2 and 3 weeks. So here's the way we place this trade. We're going to short the 210 strike call. So we begin by shorting the option at that level, right? The strike price is the level below which we don't think the price of the stock is going to fall. So in this case, it's 210. Then I'm going to go long or buy the one strike above that, which in this case turns out to be 207.50. So I have a spread between those two strikes of $2.50. So the stock's at 225. So if my short call is at 210, what that means is if NVIDIA is at 210 or higher on expiration, we're going to make a maximum profit. And what is the maximum profit? The difference in the two strikes minus the cost to get into the trade. All right, how much would it cost to get into the trade? Let's go look. So I just hit my little trade button. This is for a virtual account. And I'm going to go midway between the bid and the ask price. That'll be my initial offer, which is $1.97. All right, so what's our max profit? What's our max risk? So the spread between the two strikes was 250 minus what it cost to get in, $1.97. So what's 250 minus $1.97? 53 cents. So if I could make 53 cents on an investment of $1.97, let's see what that is as a rate of return. It's going to be very nice. It's like 27, 28%, 0.53 divided by 197, 27% in 18 days. What is the probability that this option will be in the money at expiration? This is where you look at the delta of your short call, which is 0.777. Sounds like an airline. So there is a 77.7% chance that at expiration, Nvidia will be at 210 or higher. That, my friends, is a really good trade. I already have a bunch of positions on Nvidia. Um, I was going to do it until I found one good one. The first one was a good one, so let me see if I can find one more. How's that? Then we'll wrap up. AMD. So what am I looking for? A level of support. So AMD is at 506. The support level down here is at about 450. 450 is a long way away from 507, so I'm not sure if the market will pay us anything, but let's look. You never know. So I'm going to go out 18 days again, and I can generally tell whether you can make anything by looking at the delta. So most of the spread trades that my partner and I will do have a delta between 0.70 and 0.80. This one has a delta of 0.83. So this is very high probability. The market may not give us much of anything, but I'm going to look. So I'm going to go -1. That means I'm shorting that option. I'm selling to open. And then I'm going to buy the 445 strike call. So we're separated now by $5. The cost to get into this trade would be 423. So what is our max profit? 60 or 77 cents? So if I say 77 cents divided by 423, that's 18% in 18 days with an 83% probability of a max profit. There you go. So we went 2 for 2. Imagine that. So spread trades are my go-to strategy, along with covered calls, right? Do a bunch of covered calls and spread trades. I like the fact they're both relatively conservative if you do them the right way and can be very profitable. So hopefully that gives you a fuller understanding of exactly what I do to go look for a trade and to place that trade after evaluating the trade. Today was a lot of fun. These are always a lot of fun. Certainly hope that you enjoyed it. I'll be back with you next week. So until then, be safe, be blessed. Bye for now.